name is Nick Adams, one of the financial consultants on the team at John Graham and Associates. Right now, we're getting a lot of questions about the federal student loan cancellation policy that the recent administration announced. And so we want to record this brief video to go over the details of it and answer some questions that we've been getting. So let's go ahead and dive right in. Really announced over a little bit over 2 weeks ago, the program that was announced addresses many different things. It extends the payment moratorium through the end of 2022. So student loans are not having to be paid. That was going to expire here soon, and that's extended until the end of 2022. More importantly, what we'll talk about today in this brief video, it offers partial debt cancellation for those of us that still have student loans, or those of you that still have student loans, if you meet the criteria, which we're going to go over here in just a few slides. It also included proposed updates to the Public Service Loan Forgiveness Program, and then it has new income-based repayment plans. So the announcement was encompassing multiple facets of student loans, but the most important part that we're getting questions on and that people are researching online is, hey, do I qualify for the partial debt cancellation? And what does it mean and what are the parameters? So let's jump into that real quick. Loan cancellation. The plan is going to cancel up to $10,000 of federal student loan debt for individual borrowers with an adjusted gross income of $125,000 or less. Now, if you're married and you file your taxes jointly, the net threshold is $250,000. So if you are a couple, a family, and you still have over $20,000 in student loans, so let's say $10,000 on the spouse and $10,000 on the other spouse, and your income is $250,000 or less, and it's a federal loan, then they will cancel $20,000 total. Okay. Now that cancellation does increase to $20,000 per individual borrower if you were a Pell Grant recipient. So if part of those loans are from the Pell Grant, then additional funds are going to be canceled for you. Now, the critical point of this is that you're based on eligibility on your income from 2020 and 2021, not 2022. So this year's income is not taken into account when cancellations will start happening later on this year. It's going to go off your 2020 and 2021 income. Now, the impact is fairly significant for this. According to the Department of Education, 21% of borrowers are 25 years and younger. So a large percentage are obviously young adults, graduated colleges and universities in the last 4 to 5 years with that. But the largest concentration of borrowers still to this day are between the age of 26 and 39, and that represents 44% of student loans that are still outstanding. Federal student loans are between the ages of 26 and 39. And then 35% are actually 40 plus. Keep in mind, this does include graduate degrees, student loans on graduate degrees. And then it actually 5% of student loan borrowers make up senior citizens to this day. We all know the cost of higher education is the main problem here. And that's why it's not surprising to see all age demographics impacted with student loans, and this program will have an impact on that. So we wanted to go into some frequently asked questions. The details are pretty simple. Do I qualify? But frequently asked questions that we're receiving right now, the number one is, will my loan be canceled automatically? The answer is no for most borrowers. The Department of Education is creating a simple application for borrowers to claim their relief. Okay, it's going to be available according to everything we've read so far in early October. And then it'll be a 4 to 6 weeks process for the cancellation to take place. When you are able to register online, keep in mind, they're going to ask for your 2020 and 2021 tax return numbers. They want to know your income. Now, you can log online right now and get registered to be notified for when that website goes live. The question was, will my loans be canceled automatically? No, for most borrowers. You may be in a situation now where the government already has your income for other programs that you've been a part of, and yours may be canceled automatically. But the safest thing to do is register now to be notified of when the new website goes on live in early October. And then you'll be able to log on there and register and qualify for the cancellation. the Department of Education does recommend that borrowers apply before November 15th of 2022 to get the process going on everyone. Next question, are current students eligible for loan cancellations? Yes, that was provided their loans were obtained prior to July 1st, 2020. So just a few months ago. Borrowers who are dependent students need to qualify based on parental income and not their own. So I have nieces that are in college, just started college last year. Keep in mind that they're still dependent on their parents. So it will be the parents' income that counts towards the cancellation policy on their loans, not their own income if they're still dependents and listed as dependents of their parents. A big question, are graduate students eligible for loan cancellation? I kind of answered this a little bit earlier, but yes, provided the income limits are met and it's a federal loan such as a direct loan or a Grad Plus loan. Okay, keep in mind, in no circumstance right now are private loans eligible. But if you've got your master's and a higher degree and you have loans and they were federal loans, they will be eligible to have up to $10,000 canceled off of those as well. Do Parent Plus loans qualify for cancellations? Yes, Parent Plus loans that parents have taken out for college educations for their children do qualify, once again, providing that the parent, does not pass over that income threshold that we talked about earlier. Will I be taxed on my canceled debt? The answer is no on the federal level. Okay, so there's going to be no federal tax on the cancellation. But at the state level, each state has opted in or opted out to a previous ruling on taxing student loan debt forgiveness. So your individual state, depending on where you're watching this and where your home residency is at, is going to depend on, hey, am I going to be taxed on this debt or not taxed on that? So certainly seek an advisor in your state, really more seek your accountant or your CPA to determine that in the individual state in which you live in to see, is my state participating in this, or am I going to be taxed at a state level on this debt cancellation, essentially? Bigger question, will my monthly payments be adjusted after cancellation? Well, that really depends on how your monthly payments are set up, okay? Borrowers on an income-driven repayment plan generally won't see their monthly payments change because your income is not changing, okay? Now, borrowers who are on a fixed payment plan should have their monthly payments recalculated by the loan servicer because their outstanding balances will be lower after loan cancellation, which means your payments can and will change. But the best thing to do is once the cancellation happens, contact your loan servicer and ask for your loans to be recalculated to see if your payments should change, need to change, or if by changing them, puts you in a better position to pay them off quicker. Okay, those are the top questions we're getting about the student loan forgiveness program that was just announced by the administration a few weeks ago. If you have any other questions, please do not hesitate to reach us. You could find us online at investwithjga.com or find other videos like this on our YouTube channel, Invest with JGA. If you have any questions following this, please feel free to email us or give us a phone call. We'll be glad to answer them. Thank you for your time.